What's up, guys? It's August 9th, 2024. Pretty sideways day. Got chopped up, but I'm okay with it. I know that sounds weird, but I mean, what do you want me to do? I'm a breakout trader and it was reversing. I hit out. Didn't get frustrated. I walked away. I ended up missing this leg. I was watching this leg and then watch that sell. It is what it is. I kind of like that I'm coming to terms with it. I'm just like, because the breakout will come. And the tighter the range, like if I caught this leg, this is a good chance I would have traded this leg, right? If I traded this leg, what happens here? That's what I'm saying. Like, okay, I did take a beating, I did lose money, but that's what I'm saying is like previously I would just rip the whole day up and blow my accounts out. So it is what it is. I'm fine with it. The accounts are still green, which is crazy to think about because I'm doing some damage. When I'm losing big, but I'm also slowly starting to catch these breakouts. I'm really focused on taking one type of setup right now. Just getting good at one thing. If any of you are even watching those videos I post in the Discord about Tim Grover, he talks about how he trained with Michael and Kobe, and you get good at one thing, you get really, really good at one thing, then you add to the next thing, then you add the next thing, you add the next thing, and then over a lifetime you have a million things you're good at. And that doesn't mean get good at trading stocks and go make Shopify. I'm talking about getting good at breakouts, then getting good at leg twos, then getting good at leg threes, then understanding maybe I'm not a range bound trader, you know? Maybe I need to trade really small for the first couple of months of trading in range so I can get used to fading bar 30 and buying bar 35. Buy, testing this, and then so there's different answers, but first things first, focus on get really good with trading breakouts and understand everything there is to a breakout. Because one could even argue if I understood breakouts, I wouldn't have got chopped up, right? Because then I would understand this is a bad breakout. So how can I even move on if I'm still learning breakouts? So I'm focused on breakouts. It is what it is. Doesn't mean I'm not gonna trade. Leg one, pull back leg two, pull back leg three, and an expanding blah blah blah. I don't know what I hate expanding triangles. Does anyone know anyone who likes expanding triangles? If you guys know someone that likes expanding triangles, they're lying. There's no overnight price action here, but excuse me. It's super cold here all of a sudden. So climactic third leg, have a bear gap, two bull bodies. Strong, this is a good bull bar, but the context is like a little weird to me. Just because it's a climactic move with a good bull bar, so that's bad for the bears, good for the bulls, but we gotta see a good follow through and see what the price action looks like in the upcoming days to really determine what type of bar this was, because is this the start of a leg higher or is this another leg double bottom? Um right at this exact moment, I think the bulls are gonna try and go a little bit higher, but today's price action, there's a lot of sideways on the 45-minute right here. Can I extend this line to the right? I don't think so, but this line looks like it kind of line up. No, it wouldn't line up. So hold on, let's see. Okay. Wedge bottom here. That's right here. 1, 2, 3, breakout. Really bad breakout. So much sideways price action. Looks like 45 minutes going to the daily. This is the daily right here. Yeah, let's get into it. Yesterday's price action, gap up, like one, pull back like two, and we go sideways. Where's yesterday? We go sideways, pull back into the EMA, but we end up closing above the EMA. It's pretty much a leg range, a smaller leg range. more range bound price action. And today we see a continuation of that. Kind of crazy. If the numbers weren't there, it'd be hard to tell where the day is. But the day starts right here. Gap down. Bull bar. Bad for the bears, good for the bulls. Bears want to see a bear bar and trade lower. However, bar 2 is an outside bar. Does it trade one tick lower? Bar 1 slow, 34.25. Bar 2 is low, 31.25. Oh, bar 2 is low, 34. Bar 1's high, 34.25. Bar 2 is low, is 34. What? 34. Okay, this stuff always confuses me. This bar I can see just went down one tick more. Bar 1's low is 34.25. Bar 2's low is 34. Oh, yeah. So it's higher, so that means it's lower. Yeah. So one tick lower. Okay, now we're starting this thing. So yeah, we have an outside bar, bar 2, sells off and reverses higher, closing strongly above bar 1's high. But we have tails on both ends, so it could be a range bar. Bar 3 looks like bar 3 is a strong bear bar, breaking past the EMA and reversing bar 2. We kind of have yesterday we have a parabolic wedge right here. Then we can see it as a leg 1 deep pullback, leg 2 minus that. Even the wedge could look kind of like this, or it could even be like this. You see push 1 deep pullback, bar 77 push 1 deep pullback, push 2 pullback, push 3, reverses lower, gap down leg 1, pullback leg 2, bar 5 good bull bar on support with bar 74, bar 6 deep pullback. We're testing the lows here versus closing at its midpoint. Not the best close for the bears. Bears will see this as a leg 1 pullback and they want a leg 2. However, there was a leg 1 here. There was a leg 2 and a leg 3 with bar 7 reversing higher. Bar 8 is a pause. Bar 9 is another breakout bar. And we have another parabolic wedge. Leg counting is pretty important in ranges. And then we have a leg 1 pullback, leg 2 for the bears. And then bulls get their leg 3. Where's the leg 3? Leg 1 pullback, leg 2 pullback, leg 3. So now I'm looking here, the wedge top. And there's also, you see all those tails? Those are all pushes. If you guys might be saying, oh, you're just saying everything's a wedge top. Well, we're in a range bound, so there's going to be a lot of wedge tops. And if there's 3 pushes in one direction, that's a wedge. It doesn't have to be perfect. It doesn't have to look the same. It's just, look, this is a wedge. 1, 2, deep pullback. 3, that's a wedge. Bar 27, 28, 29, that's a wedge. But it's an implied wedge on a smaller time. Well, and on this time, we can see the 3 pushes by the bulls. So here's a wedge, and that leads to a leg 1 pullback, leg 2, and we go more sideways. Bar 30 looks like it's a sell vacuum testing the high of 15, and then we go sideways again. Bar 31 is an opposite bar. Bar 32 could be its second leg. It's strong enough. I think bar 30 is strong enough to get its own second leg. The second leg doesn't have to be the same size, but we can see a second leg here with 32, 33, 34, and 35. So leg 1, pullback, leg 2. Or you can see this as a leg 1, pullback, leg 2, pullback, leg 3. Whatever you see it as, I think if you're short, you got to get out around 36, 37. I was short and I got out at 37. I wanted to see if this was if we were going to sell off to around here, but we didn't. That was that. I didn't catch this leg. I was kind of over it because I got dumped on. Here we can count the legs breaking out above the EMA. Leg 1, trend line break 40. So leg 2, opposite bar 47. Leg 3, parabolic wedge in a range. Every new high is being sold. So this is parabolic and it's a new high. And that sells off for about an hour. Leg 1, pullback 58. Leg 2, pullback. Leg 3. I did that last leg sloppy because I was thinking in my head, leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4. Or you can count this as a breakout, leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4, and it reverses higher. Trapping bears. that market ordered short below 61 gets trapped on 62. Market goes sideways into a tight trading range. That's why I'm kind of happy that I skipped out today because of just not messing with this. This would have been catastrophic. This was bad, yeah, no doubt. This would have been catastrophic. Here's what it is. Let's talk about the gaps a little bit. Today's not the best day to talk about gaps. Well, I mean, any day's a good day to talk about gaps. Because gaps, if gaps are closing in ranges, then you know we're range bound. If they're staying open, then you know we are trending. Or at least there's more pressure. There's trapped traders. So there's no gaps here. All these gaps are closing with the tails. So it's range bound price action. First gap we actually see is right here. And that closes with 24. 23, 24 is closes. Then bears get a gap right here. So that closes on the way up here. Then bulls start to get gaps. So in range bound price action, gaps can close. You see how it looks like they're staying open? Then it closes on this side. And bears, they get a gap here and it gets tested. And it goes for a few legs lower. So leg one, pull back, leg two, it goes. So this gap has some continuation. This gap has some continuation. And then no more gaps, it's super sideways. So gaps and trap traders. It's just a super quick 1 minute talk. And then I kind of want to talk about more trap traders like on a trend day, it'd be better just so you can see. So let's say this is a good example. Okay. These bulls bought the high of 29. That's why there's a high tick there, right? And then the market dumps on them. Now look at bar 30. I'm going to delete this gap, but just know the gap's there. Look at bar 30. So the bulls that bought the high tick and buy the low tick, they never get out at break even. Do you see what I'm saying? So there's trap bulls here. These bulls that get out, there we go. This tail, bar 31's tail, needs to travel here. However, we can see the price action right here. Bulls buy more, lower, and then look at the 50% level, it gets tagged, and the gaps start to close because now bulls are buying. But if the gap stayed open, that would be trap bulls. So let's find an open. So if the gap's closed, the bulls are buying lower and getting not trapped. So here's going to be some trap bears. Let's find... Okay, right here, trap bears. So we'll do it like this. Bears that get short on 65, 66, they're entering in the markets late in the day. Put the low tick there. So they see the high of bar 67 and they immediately short the bar. They're like, this is the first gap bar. They're all good. But look at the 50% level. They don't get out right away. So now they're sitting in they're nursing their position. This is a losing position. This is a losing short right now. Now they're starting to feel a little bit better, and then bang, they get trapped again. They get so the market rallies and they start shorting. We get a double top. Now the bears are looking good. See how the gap's getting weaker? That means more and more bears are able to get out, break even. Or they might hold for another leg lower. And eventually they get out. Did I say that right? Let's do one more with the bulls just to make sure. So this is going to be an example of bulls not being able to get out. So here's the gap. Leg one, pull back leg two. Bulls think this is a breakout. They think 50 is going to reverse and I'll go to the moon. Because I think that's what we've all thought at one point. Buying pullbacks, buying like breakout, buying the dip pretty much. Anyway, so I got the hiccups. The high of 51, bulls are trapped. They try and buy the low of 51. Look at the tail on 52. It never lets them out. They have to get back to the 50% level. And then they buy more at the low of, what is this, 52, thinking this is a double bottom. And look at the follow through 51, 50, what is that? 52 got? Excuse me. 51, 52, 53. Look at the follow through on 53. It doesn't even come to the 50% level. So bulls that bought here are still trapped. They never get out, and they have to hit out their position, and the market dumps. Now, stronger bulls might keep buying all the way down. Look at the resistance. Bulls that bought here, bought the wedge bottom, 50% get double topped. So when Al talks about there being a mathematical reasoning to 50% level, there it is. I'm still learning. I'm not no guru. So please study these reviews. I do them so I can learn to talk about the markets, and they've been working out. I hope you guys are doing your own form of reviews, or at least like marking up charts. If you like gaps, draw gaps and just study them. I'm starting to really like them. Yeah, that doesn't, just because I like them doesn't mean you have to like them. You know, find what works for you. If you like I don't know, range bound plays, then be a range bound trader. Do what works for you, and then make some videos and let me see them, because I suck at ranges. So you guys have a good one. I hope you guys had a good weekend. Hope you guys been studying all weekend and having absolutely no fun. I'm just joking. Trading is fun. Anyways, have a good one, guys. Hope you guys are doing okay. Thank you for your support. I will talk to you later. Bye.